All right, everybody. Hopefully, you guys had a good week in the markets. Just a little impromptu, probably be short because I just saw actually as well. Tevis is going live with the SoFi Weekly folks. Apparently, they don't know how to stick to a schedule. Apparently, they are too cool and they feel like they can just make any time slot that they want. But as always, they do a really good job. So they deserve the credit, and everybody should go hang out with them, watch them whenever they have the ability to. So I don't expect a lot of people to show up because I haven't been doing lives very frequently. But at the end of the day, it's always fun to check in with folks and see how they're doing, answer any questions that anybody might have. And that's pretty much that. So that's why I'm here, just to hang out, chat with anybody as they may or may not show up. And that's pretty much that. Hopefully we get some folks and eventually get the ability to have a good conversation coming in. In the background, I'm just updating some minor things to make sure we don't get some randos just coming in and spewing up garbage as they tend to want to do. So there's that. But if you guys haven't already, be sure to check out everybody's affiliated channel. That means Vince, that means Amit, that means Chris and his Discord on his Patreon. Be sure to do all that. Who else is there? Crossroads is doing a good job. Congrats to him on 10K viewers. And it's a good bit. I'm trying to think who else there is. I guess I do have some news for you guys. If you don't follow me on X or Twitter, whatever you call it these days, I did initiate another position in Palantir, another 500 shares there. So that's an increase of about 10-15% on the current position. I had a good opportunity to talk to Amit about 15 minutes or so on the end of his weekly close down after the bell earlier today. And I was just like, you know what? I got the money. You know, what's an extra, what is it, 10 grand? It's not a big deal. Let me just go after it. And I took the opportunity as well to initiate another 2,200 or so shares in Rocket Lab. So it's like another 10 grand or something like that. So it's nice to be able to just have that opportunity. And I had another position that I was 50% wanting to get rid of anyway. So there's that. So I trimmed that 50%. And honestly, I did it after hours because I have the ability to, and I'm rich. So I can pretty much do whatever I want. That's a bad joke. Anyway, hopefully everyone is doing really well in the markets. I'd love to answer any sort of questions anybody might have. Like I stated, this is probably going to be a really short one. Some interesting ones that I've opened up recently. For those folks that are interested in speculating on the movement of cryptocurrency, I did sell some puts on BITO, which for those of you guys, maybe I'll share my screen. For those of you guys, let me shut down some of these other not important tabs here. For those of you guys that don't know much, it's basically one of those ETFs that allows you to trade and speculate on the price of Bitcoin. So rather new one here, started in October 2021, but it's one of the few that is allowed to trade. But it's one of the only ones that has options as well. And so what I did was I sold an at the money put. And I think this is just something I'm just going to continue to roll on and on and on. Reason being is because eventually I think it's going to continue to go up, right? So if you have the ability to use theta decay in your favor, you're just going to be able to capture a little bit more premium. So that's one of those ones that I'm doing as well. Palantir, I have some 17 puts on. I think I still have some $4.50 puts on Rocket Lab. So I might let those expire in the money as well. I'm trying to remember if those are June or July's, but regardless, that one's pretty good. The only covered calls that are in question right now, my NextEra Energy ones are actually in question, and I'm still juggling that SPY covered call as well. So I have 515 SPYs that I'm continuing to roll up. So I haven't had to lose any of the profit yet. So we're still rolling for slight profit every single time. And the hope is eventually I get it to the 520, 525 range, and eventually the market just cools off for a little bit. I was hoping over the past week and a half, that was the case, but we've ramped up back close towards all-time highs again, which is fine with me. At the end of the day, we'll be able to take some time and get that rolled out. Had a lot of opportunities come up worthless this week. Palantir covered calls, SoFi covered calls. TQQQ ended up in a little bit of a tiffle. Where did that one actually end up? That one I had to roll. Normally I let them expire, but capture on my profit. But yeah, this one I had $65, so it dropped. Actually started running up again. I think it was like in the 58 or so, and then last week, obviously, it just started all going on a run for TQQQ, and that's obviously the triple leveraged Nasdaq. And so I have about 1,300 shares of this, close to 100 grand's worth. And with this one, it started to get away from me again. So I wrote it probably in the $58, $59 range. And so the hope with this one is just continue to hold. I'm not trying to get rid of these things. I don't try to write super close to the money. I try to get far out of the money. But when you have a big move and swing like that, you get close to it. So I don't think I lost any money. I think I just rolled it out for a slight 10 or 15 cent profit. I think the $68 or something like that for next week. So we'll see how that one rolls as well. Hopefully we'll be able to get both weeks profits just all in one. I'm trying to think if there's any other ones. SLG, man, I've been rolling this one. Like, it's, if those of you guys that are in it, speaking of covered calls and just making some money, this one's a lot of fun because, you can roll. I've really only been in the past year. So I'm up about 100, 120% on these shares. And, something as simple as especially for the guys that got in at like $25, like I did, this one's really beautiful because you could be selling these $60 covered calls. I think I actually have like the August 65s or something like that. And I'm in the profit by like 50, 60% already. So, I mean, if you think about it, you're selling for a couple months worth of dividends. So I think the dividends that these guys give out is like 20 or 25 cents a share per month. And so if you're able to capture 60 cents, it's like you're not only getting a phenomenal dividend, but you're also getting a phenomenal income stream coming in strictly for that. And you can do whatever the hell you want with it. You can buy more shares of SLG. You can use it to buy more Rocket Lab, which is what I've been doing. So there's that. And it's been a lot of fun. And it's been something that I like to tend to do as well. But anyway, let's see if anybody's got some questions. Doesn't look like it. I'm sure I'm up against competition of SoFi Weekly, so that's always going to be very difficult. But Simon's talking a good bit, so let's see what he's up to. What kind of return on Cardone Capital? Still in there, good choice. So the Cardone Capital, I'm actually getting 68. So for those people that haven't watched the channel much, I've done a plethora of different investments: Fundrise, Cardone Capital, M1 Finance sort of stuff, and I've explored. So you can always go back into the channel and do some exploration for yourself as well. But I have I initiated a $15,000 investment in Cardone Capital before I moved to Trinidad. So I moved to Trinidad in 2019. That $15,000 investment was split up against 5 different properties, to which I get a K1 form. So I own a portion of each of these 5 properties. And so initially what we were getting was, I don't remember what it was. Was it like $50 a month? I want to say it was like $50 a month times 12. That sounds right. And then if you divide that by 15, so I was getting like a 4.5%. Now it's not $50. It's up to like $68 a month. So you're starting to see increases in that. So it's about $800 a year. And that's off the $15,000 investment. So that's a 5.5%. But the thing that people get upset about and they don't understand about this, and so hopefully people do, get a little bit of realization about this are like, oh, they think about it like it's a stock, right? That like that $15,000 will never grow. They think of it like it's a loan. And it's like, no, my guy, like you take that $15,000, and this is the beauty about real estate. And if you, depending on what kind of investment you're doing, generally, you'd probably put down 25-30% into a building. And so that $15,000 of mine would allow me to get $50,000 worth of real estate. Well, what's beautiful about that is because I own or control 100% of the asset with 1/3 of my money into it, meaning I control $50,000, but I only put $15,000 into it. Then if it went up 100 to $100,000, then technically the return is triple leveraged for me. And what I mean by that is let's just say now it goes from $50,000 property to $100,000 property. I'm able to capture that $50,000 in equity, and my $15,000 investment is now worth $65,000, right? So I can do a lot of things with that. We can refinance, pull some of that money out, use it to invest in more real estate, or just let it go and continue to pay the mortgage as expected and do what have you. And I think a lot of people just assume like the monthly distribution that I get of 4 to 5% annualized is like all I get. But I've gotten appraisal values every year. They do like a semi appraisal value of each of the properties because it costs them, I don't know, a couple $1,000s to do all the appraisals for these 5 particular properties for the K1 purposes, and also just to like update the tax basis of everybody. And it's gone up to like $40,000-$50,000 worth of an investment. So that means a lot of the property that we've invested in over the past 4 or 5 years has actually gone up a pretty substantial amount of money. So if you think about it, a lot of them have probably doubled in price, maybe. So there's a couple things that go into that. Part of the capital cash flow that comes through uses capital investment to freshen up the property a little bit. But you have to think where rents go. And I don't think people understand how real estate works, right? Specifically, multifamily real estate. So generally speaking, multifamily real estate, specifically 5 units or more, goes off what's called a cap rate. What a cap rate is basically if you were to buy the property 100%, right? So it's a $1 million building, you put $1 million down, you buy the whole thing 100%. The cap rate is basically after your insurance, taxes, all your expenses, what you walk away with in profit. And generally these huge, huge buildings, they have like a 4%, 5% cap rate. 5% is kind of, high. And the reason being is because this is where you just park good money. Like you just park money here because you have insurance companies that need to find places to park money. You have banks that need to find a place to park money. They're nice A plus, or maybe even B plus sort of communities. So you're not taking on a lot of risk. And so what that means is let's just say this $1 million property is at a 4 cap. Let's just make it a 5 cap to make it easier. So you're making $50,000 a year on the property. So one of two things can happen. You could try to sell it as a 4 cap. So if you sell a $50,000 property at a 4 cap, now you can sell it for $1.25 million, because 4%, if you take basically $50,000 divided by 4%, because that's what your return should be, you get 1.25. So you can increase the value that way by 25% if somebody's willing to pay you a 4 cap for the property, right? Which they might tell you to go blow smoke up your own ass and say that's not appropriate. Or you can increase the rent that you get from the property. So let's just say you do a really good, successful campaign, you do some renovations, maybe the stuff was built in the 80s and none of it has marble countertops, or none of it has in-unit washers and dryers, things that a modern apartment building, that these days built in the 2020s and beyond would really have, and what people really expect if you're living in kind of like a luxury apartment and what has been, $15,000, $20,000, $15,000 to $2,000 a month in sort of real estate, or an apartment every month. So if you think about it in that perspective, and then you know, update that and get, let's say, $75,000 in sort of income on a monthly basis, not a monthly basis, an annual basis. Let's 75,000, you know, take 5% of that. Now your property's worth 1.5. So, you know, you start to see how you can start to play some of those games with real estate. And I think a lot of people don't really understand how that game works. They just assume, oh, you put 15 grand in it, you're getting a monthly cash flow. It's just like, dude, what do you think it happens when you buy a real estate investment property, like a single rental, right? Like you get the appreciation, you own the building, right? So the building goes up in value, goes down in value. That's the risk you're taking on. But anyway, that's just some food for thought. So to me, I think the investment at Carter Capital has been really good. Not only have I gotten like about $3,000 or $4,000 in cash flow over the past 4 or 5 years, so about a third of my investment, no, probably about 25% of my investment back in terms of like just actual cash back to me. But the value of the actual properties has increased pretty substantially. Like I said, it's a $15,000 initial investment. The last time they quoted it to me was like $45,000 in actual value. So if they did a refinance, I'm sure I'm going to get a $15,000 check back, which a lot of these properties are on like 5 or 7 year initial terms, interest only or something like that. So if they refinance them, they'll either sell them or find an amicable sort of term that they can continue to work it, either interest only or what have you. And if that's the case, I get my initial, you know, $15,000 back and still own a percentage of the properties. And what would I do with that 15 grand? I'd probably reinvest it into another deal if I could. And that's the beauty of real estate a little bit. It's like you kind of want to have a piece where you're levered up, but not over levered, right? Where you get to that place. You think about it, it's like putting down 30% is beautiful because you get that 3-to-1 leverage. But it's like as soon as you get to a, say, 60, 70% ownership of the property and your equity owns that much, your leverage decreases with that. And so you could take that extra money and then put it into another building. Now you own 2 properties that are appreciating. Now, of course, that obviously has risks associated with it and everything like that. But that's how you really, you know, in a very good way, build wealth. But of course, that obviously opens you up to risk by doing that as well. So you have to kind of think about that. Like for right now, the personal side for me, you know, I have my personal house that I live in right now. That's where I'm, you know, streaming this from. And then I have the 2 Airbnbs. So those 2 Airbnbs are great, but it's like, what if something bad happens, right? I still have to pay the mortgage. But at the same time, it's nice because I could own just one and get the appreciation of just one, which could be, you know, a couple percent a year. Let's just say it's 2% a year, but I put down 15% on that one. So it's like, you think about it, I'm getting like 6 to 7 the leverage on that. So 2% up in the actual housing price actually means it's about 14, 15% in terms of actual appreciation on my money. So if you think about it, you know, if I owned it 100%, I'd only get a 2% increase on my money. You know, because I owned 100%, I'd have to put down whatever it was, $400,000. But instead, I put down like $60,000 or whatever it was, and I still get that appreciation on the entirety of the building, right? So that's kind of the beauty of the real estate piece. I think people don't, they're like, oh, well, real estate only appreciates 2 to 3% per year. It's just like you can own it for 1/5 of the price, right? So $1 million of real estate you can have with $250,000, and now you're looking at 4 to 5 leverage on that 2%. So you're only getting 8, you know, 10%. Anyway, I'll get off my soapbox for that, but I think people don't really understand until they're actually in it. So yeah, I like it. You know, I think the thing is though, you have to realize is like you get the money out when you get the money out. There's no like liquidity aspect to it. So if you like liquidity and you need liquidity, the stock market's the way to go. Got to think about it in that perspective, and I think people don't realize that either. Next took off for me before I could build a big position. I don't even know what to do with it anymore. Hey man, I think there's still a ways to go. I think it's going to be a big project coming through. Just do some analytics on the potential cash flow for the business, and I think you'll see. Very small position in Next. We'd love to get more. Love to hear your thoughts on Next. head to work. Take it easy. Well, if you're going to head to work, I'm not going to talk about it because you're not here. Probably just going to say take my NEXT and put it to SPY. To be honest, got a promotion, so should be more busy at work. Need to cut back on stocks I'm tracking. Interesting take on that one. So if I bought another 28,000-ish at $7 on Thursday, which bought twice over 28,000 this month to get to the run higher fidelity. I can't read. Good info. When Cybertruck? Probably never. Can't afford it. Let's see. Yeah, I own 12,000 square foot retail building, paid in 60,000 back in the 70s. Annual rent is now 42,000. Exactly. When you're buying an asset, you're kind of betting against the dollar, right? So you're putting, because if the asset appreciates, right, in terms of appreciating, it's like a lot of times you don't factor in inflation and stuff like that because that's really the value of the dollar going down. So that's why you buy the assets, right? Money is really only as good as when you're transferring things, right, from one party to another. For somebody else to do things, whether it's to buy goods, whether they're just like, I'm done, I'm just going to retire, that's reasonable. Or you're trying to buy an asset. Like I had my money sitting, waiting to be used, the $100,000 we just used for the down payment on this recent house that we bought. And otherwise it would have been in the stock market, but I knew I was going to be investing in this property. So I had it kind of sitting in my personal savings account. And so when you think about it in that perspective, it's really only useful if you need to use it to purchase goods, purchase services, or buy assets. Otherwise, it should be invested in assets. So there's that piece to it. Because I think a lot of people assume that like, oh, it's really appreciating value. It's like, well, you're kind of betting against the value of the dollar when you buy assets, knowing the fact that there's inflation and the value of the dollar is worthless. What you really care about is owning the companies or owning the house, which is a hedge against inflation, if you ask me, more so than it is kind of a like bet on the speculation that the value of it's going to go up. It's like time, right? Time's inevitable. So it's like when you just have to think about what are things that are always going to be constant: taxes, inflation, theta decay on options, like all these things are constant. So I don't understand why people try to run away from these things. Try to minimize them as much as you can, time loss, theta decay, etc. But it's like people try to bet against them, like oh, I need to buy these options or sell, it's like, no, you should sell options because you can guarantee that time is working with you, not against you. And so I do the same thing with all my money, is I just put it into assets because inflation's inevitable, right? So if you buy an asset, you're at least at least somewhat hedged against inflation. So anyway, my boy's heavy in Costco, putting in a Palantir, Visa. I don't know SNA. I guess FAL is Aflac, if I remember correctly. But yeah, nothing happened to Cash Flow Chronicles, man. I talked about this a little bit on what's the guy's name? Amit. I was fortunate. I was giving him crap because he never calls me. He calls Steven, he calls Chris, he calls other folks, but he never calls his good old boy Matty Moolah. And so he was just like, I'm gonna call this motherfucker. So he called me, and we chatted for about 15 minutes or so, and it was good because I hadn't chatted with him in a while. But yeah, I talked a little bit about this, like between switching jobs at work, doing some international travel for work, closing on this house, flying back to and from Northeast US, losing power last week at the house for a couple days due to the storms here in Houston. Me and Chris haven't been able to link up, and Chris has had the few times where we were thinking about linking up. He has had to go to New York. Like one night we were going to do on, I think last week or something like that. He went to New York for something for 2 days. And so, and I haven't chatted with him really since. So Chris and I are still on good terms. So it's not like, it's never going to happen again. I think Chris and I always knew that it would probably go down to like once or twice a week at most. Um, and I think another thing is just like we still have that public portfolio that Chris and I chat about with every once in a while. We actually, well, I shouldn't say that. I'll wait for a Cash Flow Chronicles episode. But if you guys are interested, we still have the channel, and I'm still trying to get the channel monetized as well. The other channel, they gave me some slack because understandably it's policy, right? So they gave me some slack because I was doing the streams on this channel on Matt Money, then I was downloading them, putting them up there. Well, I thought I deleted a lot of them. Turns out I didn't delete as many as I thought I did. So I still had some that were sitting over here on Matt Money, and they're like, "Hey, you have duplicates. We can't have somebody just been doing duplicates." And I'm like, "Dude, like I'm in both, right? Like it's not like I'm taking from some anyway." So I submitted like a video to them, like, "Hey, I'm him. Like I'm not trying to steal." I was just like, "It's just a partnership between me and this gentleman." I'm trying to separate the brands, and so we're still kind of going through that, and I should probably put some more rigor to that as well. So hope is that eventually that becomes its own machine as well, and we can get back to making a video every once in a while, because Chris and I still chat. We still have some things to catch up about NEXT and a few other things as well. So yeah, I think it's a good time, and I think Chris provides a good insight onto whatever he does as well. But I do things a little bit differently. So we're kind of yin and yang from that perspective. Chris has been talking about how oil prices are high, and I'm like, these are not high, and I don't think they will get higher. And he's been touting. So we do have our disagreements, but it's all based off of the way that we look at the market, and he views it from a very short-term sort of mindset. He does have his long-term plays, so I'm not saying he's only that, but you still have to he does things way shorter than I do. He's much more about the quick wins and the swing trades than I can do. I'm not as witty as that. There are some things that I've thought of that ended up playing out, but I never played them just because I just feel like I'm not in that game, So yep, Rocket Lab's going to 0, 100%. I just bought some more today. Thank you for joining from Amit's live stream. Amit's a good friend. Been chatting with him for quite some time. Teddy, thanks for coming a new member, my guy. Much appreciated. That's really awesome. Really appreciate that. KMI, Kinder Morgan, I haven't looked at their financials in a while. Last I checked, they do a pretty good job, and they're keeping their debt in check. The person to ask is really Steve Fiorillo. He does a lot of writing on the MLPs, Master Limited Partnerships for pipelines. And so Kinder Morgan does a good job. I used to invest in them when back in the day. I made like $700 or whatever, and called it quits. Once it went from KMI to when it went from basically a MLP, a partnership, to a C Corp. And I took my money and ran. So there's that. When is it going to be under 6? I don't know. If I knew, I wouldn't. But I wouldn't be surprised if it dwindles. There's going to be a lot of lack of news between now and whenever they announce the phase 2, which is train number 4, to be sanctioned. And even still, there's a lot of time between when you actually see money coming into the company. So I think that there's going to be a lot of times for pullback, but I guess it all really just depends on what people view, right? You're paying $1 now, or say $7 now, for future cash flows. And I think the thing that you need to recognize is phase 1 only, it's not a very lucrative opportunity. Like you might make $200-300 million in cash flow a year. The company's worth, what is it? For those guys that don't know about NEXT, it's a company that me and Chris talk about. And I don't want to go into it too much because it's something we chat about together. But I'm going to talk about this for a second, and then I'm going to hand it off. But so I just have a few shares in my Robinhood just to keep track of it, but I have more shares elsewhere. And I just put $25 twice a month into it. So it's worth about $1.86 billion right now. So take this $1.86 billion Think about it in that respect. This is what people are complaining about, how it's up about 50% since the beginning of the year. But it's cyclical, right? I mean, you can see the ups, down over the past 2 years. But let's just look at the year to date. So people upset because we were kind of chatting about it when it was getting to the $4 or $5 range, and we picked up a good bit and chatted about it on Cashflow Chronicles. So phase one is trains 1 through 3. So that's going to be about, I think, I want to say 10 or 11 million tons per annum of natural gas coming from the Permian and Eagle Ford. And so with that, there's a lower equity hold that NextDecade has on those trains than they would 4 and 5. So the hope is they were able to secure the permit, they were able to get the land, they were able to do all these things, but they don't have the cash to be able to build them. Obviously, building these LNG terminals is like a $20 billion endeavor, very expensive. So they got people like ADNOC now is coming in. You have a few other Middle Eastern investors, I think specifically from Abu Dhabi. You have Total Energies, who's a super major oil and gas company, forking in and purchasing equity in the trains to, one, get the money off of, say, the train aspect of things, but also to help secure long-term LNG contracts across the world. There's an opportunity, obviously. The United States has very cheap natural gas, $2.50 per MCF. They can, generally speaking, maybe not now, LNG is pretty affluent right now around the world, but let's just say in 10 years time, there's not a large amount of LNG plants, a large enough amount of LNG plants being built right now to fulfill the demand in 10 years time. So the hope is United States has a plethora of natural gas. Permian's making a crap ton of gas today. Eagle Ford, Marcellus, all these fields are making a crap ton of gas. So that's why natural gas prices in the US super low. Elsewhere in the world, Japan, Europe, you're talking on typical, let's just say 5-year average, you're talking about double-digit sort of prices. So going from $2, $2.50 to, let's just say, $10, it's a large margin to be had per MCF. And we're talking about billions of cubic feet per day being exported from the United States to these other countries. So we're talking billions of dollars a day, basically. And so with that, you're talking about the opportunity to own a really cheap opportunity for long-term potential, but obviously it's going to cost you $20 billion to be able to do that. So NextDecade basically sold off a portion of their equity position because they don't have the capital. And with that, they said, hey, we have the land, we have the permit, buy into this, and they're able to retain a decent amount of trains 1, 2, and 3. Then you have the trains 4 and 5, which I think NextDecade owns like closer to 40%. I have to double check. And the other companies own, 60 odd percent. So I think it's about double, if not slightly more, than what they own in trains 1, 2, and 3. So that's where the real money is made, trains 4 and 5 for NextDecade. So if you think about it in simple terms, and I'll cut off the conversation here, they're aiming for about $200 to $300 million of cash flow to distribute out to people or pay down debt by starting like 2027 to 2028, 2029 timeframe. It'll start to ramp up. You'll start to actually see this money coming through. It takes a while to build these things. So you think about it in that term, $1.8 billion company, let's just say 1.8 divided by 0.2, which is 200 million. You're paying basically 9 times for the potential cash flow trains 1, 2, and 3. Let's just say 1.8, and that's actually the 300 million. Then you're paying 6 times cash flow. Where it gets beautiful is if trains 4 and 5 come in without a hitch, they're aiming for about 1.0 to 1.3 billion dollars in cash flow. So in that particular case, let's just say you do get the $1 billion in cash flow, distributable cash flow to your investors for NextDecade. You're talking about a 1.8 times of purchasing today of distributable cash flow, which is very cheap. Or if you're talking about the potential of the upside, you're talking about buying it at a 1.4 times price to future cash flow. Now you have to consider you're going to be waiting around for some time. There's obviously risk associated with this, high capital costs, potential for inflation to come in. There's a lot of different things that can obviously impact that. But if you're a firm believer that this company is well backed from an equity investment perspective, and by the time they actually are building trains 4 and 5, that they have sufficient cash flow kind of coming in to build those trains 4 and 5, um, I think it's a worthwhile investment. And the thing is who knows? Maybe they have an ability to build and expand more beyond trains 4 and 5. From what I've seen and heard, potential there's at least ability to do train number 6. So I don't think that they are right now. The padding and like the shared infrastructure is set up for trains 1 through 5. Obviously, they're only building 1 through 3 right now, but trains 1 through 5 are kind of like designed for, if that makes sense, like in the terms of the area. But it looks like they own land for future expansion. Whether that can do 6 trains, 7 train, I don't know. So there's that. There's that piece. Let's just say, yes, lunch next week. If you're available this weekend as well, I'm not doing anything until. Well, I don't have any plans other than smoking some meats. So if you're in town, my guy, been in and out of the country, so apologies, I'm not ignoring you. And then obviously last weekend we know what happened, crazy shit. So hopefully you didn't lose power. I'll text you in a couple seconds. So other than that, when will Cash Flow Chronicles be back? Yeah. So I just want to reiterate again, Chris and I are great, right? Like I think this is what's different is so many people are so used to these content creators who work from home and also have a lot of free time. Chris and I are badasses. Like, I don't think you guys truly understand when it comes to like what we do on a day-to-day basis. I'm not saying I'm like saving baby seals, right? Like I'm not anything cool like that, but I'm at the office, pretty substantially throughout the week. And generally speaking, I get home at like 6, 7 at night, just like normal people, right? So it's hard to be able to do that and, have motivation. And then Chris also works overnight. So it's hard to kind of like mesh the two together. And just personal life for both of us has kind of gotten in the way. Me buying, more rentals, and then obviously traveling a little bit last month as well, traveling as well for the other rentals. So I'm not saying that. I don't know where I was going with that. No, not saying that Cash Flow Chronicles is done. Chris and I are on good terms. We'll get back after it. Chris is a great guy. No, I do not do that. I said smoking meat as in like barbecue. Yeah. So yeah, appreciate everybody showing up. Appreciate this gentleman, Teddy, for becoming a new member. Hopefully, I've actually thought about, let me guys know in the comment section if you guys would actually be interested. I've actually thought about doing a Patreon as well to maybe answer some more questions. Something rather cheap. And I've actually thought about proposing to Chris as well. If him and I can just like share a Discord rather than, but my problem is I invest very differently than Chris. So it's kind of tough in that respect because I don't want to dilute his message. His message is great, and I don't want anybody to be like, and that's the thing is like, there's no one size fits all for these markets. And so you can do things if you have the time and ability to kind of like replicate what Chris does and the ability to like jump on it when he jumps on it and pay attention like that, then go for it. But I think the thing is like, I'm more of a sort through all the companies and swing when you think it's deserving. So I don't like to jump in and out as much. I'll play some of the plays that Chris does, but yeah, I don't like to swing as much. I'm more of like a slow and steady, 70-80% of my money in the S&P 500 or equivalents. And then the other stuff is like conviction, like Palantir, Rocket Lab, and NEXT and stuff like that. Um, so anyway, so let's just see. Do I have any videos on how you research stocks? I would say, man, I mean, if you really don't, it's okay to admit that, hey, like I want to do well in the stock market, but I don't want to, um, I don't want to research it all the time because it's tough. Like you can keep on touch with like the headlines and be like, ooh, that's fancy, or ooh, like that's fancy. But I think if you do that, I feel like a lot of people are going to lose money, right? It's more about it, like for those headlines and stuff. It's more about attention and selling ad revenue, right? Which is why some people like to watch the folks on YouTube that are talking about all these different topics all the time. It's like, ooh, they're talking about, the title switching up, what is he actually thinking? And the drama and emotion associated with, well, I like Tesla this week, but I don't like it this week. And, they like that piece of it because it's entertaining almost rather than actually useful. And so they're selling the entertainment piece, they're selling the headlines. So eventually you just watch it and that's selling advertising. They don't give a flying fuck if you make money. And that's why I'm here. And that's why my channel's been small. I've been on YouTube for like 6 or 7 years, but I'm not one to, at the end of the day, the person that I answer to sits across the mirror from me. And so I try to stay true blue to that person. And to me, I can't lie to myself being like, I'm into Tesla this week. I'm not into Tesla this week. It's like, I like the stocks I like. Like, I'm not going to lie to someone just to be able to make an extra buck on YouTube. I don't need the money, like YouTube can't pay me enough unless we're talking about like 0.1% YouTube money. They can't pay me enough to really change my morals and in what I present, and very, very unlikely that would be able to be done. So, I'm lucky if I make, even at my best, a couple $100 a month. And we're talking about like literally almost a second full-time job doing YouTube. So you don't do these things for the money. And a lot of people end up quitting because they realize that the money's not there. So, I mean, it's okay to admit that you just want to do index funds. And I'd recommend a lot for a lot of people. I like getting my hands in the mix, and I invest a lot of capital so I can afford to make a little bit more mistakes than maybe the most average person. But I would say, man, like I'd say the biggest service you can do to yourself is invest 80% of your money in the S&P. And that's probably the best thing I could say. Only invest 10 to 20% in things that you might want to look at. But you also have to recognize what your game is, there's so many different avenues. So long-term investing can mean a lot of different things. It can mean that you're a long-term dividend investor. It could mean that you are focusing strictly on AI companies or biotech, or doesn't necessarily mean. So you have to recognize like what it means for you. For me, I like to invest in long-term growth appreciating companies. So like Google, Amazon, those are things and trends and total addressable markets that I know will continue to expand. People are always going to be, if you think about Amazon and where that's at in terms of the e-commerce as total US sales, it's still less than 20%, believe it or not, of all US sales, excluding cars, I think. So huge amount of growth potentially still in the e-commerce space. Cloud is still early on in its total addressable market as well. So there's that. So I think that Google and Amazon will appreciate very well from that. So that's where those investments kind of come in. Palantir is a play on AI. It's a play on just software in general and being able to bring the next phase of software development into light. There's where I think Palantir plays. But you could easily sit there and be like, I want to do dividends. I don't know how old you are. You didn't state that. You didn't say how much money you're playing with. So I don't know if you're trying to triple your money, if you're trying to just make sure you don't lose money. There's a lot of avenues that you need to think about truthfully. And so I'll probably leave you guys with this, which is, the thing that I always tell people, and It's part of the reason why I don't have a lot of subscribers, because I'm telling you real shit rather than just being like, buy this company, it'll make you a fucking trillionaire, and then get in and clap my hands and do all this other stuff. And I'm not talking about anyone in particular, but I mean, it's just like there's so many people that will literally try to fucking sell you a dream, and I'm not here to do that. Like, you're gonna have to do hard fucking work. Like, what I've done is not easy. It takes a lot of discipline and to put money into the markets all the time, and sometimes it's difficult. Sometimes you're down $300,000 in 2022, and you're like, I could have bought a house with that money, and it's fucking gone. But then it comes back. You know, it's about patience. It's about being able to withstand your emotions and see the long-term picture play out. And it's a test of your discipline. But going back to those 5 key things, you know, think about your objective. Why are you doing it? Is it to buy a house? Is it to pay for a wedding? Is it to fund your retirement? Is it just to give to your kids? You know, what's the reason? Plays along with this well of your objective is, what's your time horizon? Is it 2 years, 5 years, 20 years? What? If you're trying to make money in the next 6 months and you're like, I don't want to lose $1, I would say don't invest in the stock market, because you really don't know what the hell it's going to be. It could go up, down, sideways. Everyone knows that. But if you invest for long enough, generally speaking, unless there's some sort of nuclear war that impacts the United States, you should be in good hands by investing in the S&P long term. 3, what's your risk tolerance, right? You can invest in companies that are more risky, or something that's more certain. So, you know, small cap, large cap, are they profitable, not profitable? You know, there's risks of capital exposure in any company that you invest in, but there's more so with companies that, let's just say, are large cap, more so if they're small cap and not profitable, versus something that's making a shit ton of money like Google or Amazon. So there's that piece. 4th, how active or passive do you want to be? So this goes into why I think most people should be investing in the index funds like the S&P 500, is the activeness. You know, people say, oh, I want to be day trading, I want to do this. It's like, you want to be day trading, you got to look at the markets every day for like 3-4 hours. Do you actually have that type of time? And I would say most people do not. And then they're like, oh, I want to look at it, I want to keep up with it. It's like, well, if you're going to be looking at it once a quarter, you probably can't influence your portfolio as much as you think you could. And so if you want to be that kind of hands-off, look at it 4 or 5 times a year, the S&P 500 is going to do that work for you. 500 companies that are profitable. If they're not profitable, they kick them the fuck out, and they bring in a new company that is profitable. And so you have 500 growing companies most of the time, if the economy is growing, all in sync, creating profit, going up and to the right. Any company that's not on that train gets kicked off. So it's kind of like an actively managed mutual fund on your behalf with very low fees. And so you can get probably 80 to 90% of the market gains that could be had in that. Yes, there's going to be the outliers of the 10 to 20%. Let me ask you a question. Do you think working 1 or 2 hours a quarter and trying to get that competitive edge is going to get you into that 10 to 20% of the people that outbeat or outpace the market? And the answer is likely no, unless you become very lucky. And do you want to place it in luck, or do you want to guarantee your wealth? And so that's where I get into the active or passive part. Now, if you're active, you know, you're going to pay your tuition to the market, you're going to lose money, but eventually you'll find your niche as to what works for you. And you can do it. But I would say, had I listened to my own advice, I'd probably have several more $100,000 than I do today. Maybe closer to $1 million more than I have today, if I just invested it all in the S&P 500 from the get-go, instead of talking about dividend stocks and then this is the next hot thing and that's the next hot thing. This is the way it goes. And also there's that churn associated with it, right? You move from this investment to that investment to this investment. All that's a lack of efficiency, right? And with that, you lose capital just by churn, turnover. And then the fifth thing is thing that I like to talk to people about a lot, and then I'll end the stream here. Um, the amount of capital you'll be adding to the portfolio. So I think a lot of times people think that they can just put in $1,000 and eventually in 10 years they'll somehow be a millionaire. Well, that's very tough, right? You're going to have to 1,000x your money in 10 years. So you're going to basically have to increase your portfolio by about 72 to 80% a year. And that's about 3 times better than what Warren Buffett did. And all he did was invest in the stock market like a hawk, and is one of the best investors of our time. So probably only one person notably that has outpaced him, and that's Jim Simmons, who got similar returns, 70, 80% returns, but he was a quantitative genius and was able to amass those sorts of returns. And so we're talking about one individual who's dedicated their entire life to the stock market, not working anything else. Is that you? And I would say no. So if you think you're going to take 1,000 to 1,000,000, it's unlikely. And if you see people on Facebook and stuff do it, they're probably lying or stole the picture from somebody else. And that's just that. What I would say is, and let's just say you only have $1,000 to invest, then you should talk about or think about the other 4 things I talked about: objective, time horizon, risk tolerance, etc., to understand what you need to do in order to get to there. Because if you only have $1,000, you got to probably be more risky than if you were to say be adding capital all the time. But let's just say your goal is to get to $2 million. Well, what's the easiest thing to double your money from $1,000 to $2,000? And that's to go into your bank account and transfer another $1,000 into your brokerage account. And now you literally just have the amount of work that your money has to do to be able to get there. So if you wanted to get from $1,000 to $2 million, you have to increase your portfolio by 2,000%. If you add another $1,000 and you're starting at a base of $2,000 and you want to still get to that 2 million, now you only have to do 1,000%. Then if you add, let's just say, what is it? Another $2,000. Let's say you're starting at 4,000. Now you have to do 500%. So it makes things a lot easier in that respect if you think about it, and you're slowly chipping away, right? And you don't have to do it all today. Add $50 here, $20 there, and it slowly chips away. And then you think about just getting to a place where it'll eventually feed itself, right? You'll get returns of say 10%, 8%. That'll help you, right? You get $10,000 in the door, it grows 10%. Now you have $11,000, right? You get $100,000 in the door, it grows 10%. Now you have $110,000. It's pretty awesome. It helps feed and gets you a couple of months. So you're just trying to shave months off that goal when you're kind of looking at it from a time span horizon. So all those things are interrelated. All those things have a relationship with each other and they play off of each other, right? Without a firm objective, you don't really know how you can frame your time horizon, how much capital you need to add on a monthly basis, etc. But I think if you truly sit down for say 10 minutes and really think about those 5 things, you'll be 80% off. And I'm just picking a number out of the air, but you'll be massively ahead of your peers that don't have any sort of plan whatsoever. And I think the thing that's beautiful is that at least gives you an idea as to getting you in the right direction and having some thought. Whereas I think most people, they just put $1,000 in and they don't have any thought. And next thing you know, they're 2-3 years down the road, they haven't added any more capital. And, they probably lost money. Versus you, at this point, 3 years down the road, you've been adding, let's just say $500 a month. You're at $18,000 in your account. And yeah, you might have lost some money, but at least you're 18x more than Billy Bob over here that never really put a plan together. So that's the kind of thing that I'm talking about. Even if you aim for the stars, you'll at least fall down and hit the moon versus if you don't have any aims at all, you're probably just going to be falling flat onto earth and not going anywhere. So anyway, that's the hope that I hope for you guys, and hopefully if you guys need anything, you can reach out to me on X or in the comment section here, as always. But with that, I'm going to go hang out with some friends, probably play some video games, and talk to you guys soon. Appreciate it. Almost an hour. I went by quick. You guys rock, and appreciate Teddy and the folks that signed up as members today. Hopefully I'll see you guys soon, and check you guys out on Palantir Weekly tonight. And as well, I think Vince is bullish and I are doing a stream on Rocket Lab for the pre-fire test that NASA is doing with Rocket Lab, I believe tonight. So we will see you guys then. Cheers.